Okay. I don't know if we have the chairman for the event. Okay. Let me say, distinguished ladies and gentlemen, good afternoon. And I think 2-3 quick points that I picked on while listening this afternoon. The first of which, first of all, thank Ike Chioke and Afrinvest for the invitation. For me, it's really been a great pleasure and honor to be with you this afternoon. I have been taking copious notes, learned quite a lot, and especially from that's one lesson I must take home today, and which is the audio. I found that very exhilarating because it just reminded me of the Zebudaya jokes in those days. That was the time of the price control, and they would advertise beer. I think it was 75 kobo liquid content only. So on that, on one of the occasions, he said, no, this one is not the advert one. If you want to drink beer, 75 kobo liquid content only, go ahead and turn your television. But if you want to drink beer in the actual, take 1 naira 50 kobo and forward march to the beer parlor and buy a beer. So today I've heard the way he started with the audio and so on. I couldn't quite get the drift until when he now told us about how we can get rice in the actual, so thanks very much. I've been taking copious notes, and so someone said we've been having this, you have these kinds of sessions, but this is quite very refreshing, I must say. And I think to the eminent panelists and to the brilliant work of Afrinvest in this report. I listened very carefully to the presentation by the managing director of Afrinvest, Ike Chioke. Very, very insightful, report. And it quite struck me that this report was the first edition was born in the year of the banking consolidation. That's what I actually, I just realized. That's 2004, 2005. 2005 was actually the year of the banking consolidation. How time has gone by. And that then takes me to 2 quick comments on this goodwill message that I picked on listening to the report, the presentation and the comments. And what I like a whole lot about all that I heard is that much of the comparisons were actually, let me say, centered around Africa. And that's what I'm trying to comment on data now. Because more often you go to events where Nigeria is being discussed, and the examples being given is China, if it were in Singapore, if it were in this. But good, it's good to talk about them. But the key point now is that the relevant examples are now here in Africa. Picking the right comparator countries to compare with when you are making comparisons is a very important thing. And when you were talking about education, investment in education or spending on education, I turned to the chairman of one of your subsidiaries. I said, I'm not quite sure, is this federal government data or is it consolidated public sector data? And she checked something and confirmed that it's federal government. I said, that's the problem. Because the data on the data that people often quote happen to be the expenditure by the federal government. And Nigeria is a federation. But unfortunately, many of the countries that we compare with happen to be unitary states. So their own budget is a centralized, consolidated public sector spending. Whereas on those kind of items, until we consolidate what the states also spend, then you cannot compare them with some of the other countries that we met. I just put that as a footnote. In other words, I love so much about the Africa focus of the comparisons, but also pick them in terms of those numbers, so that we're not comparing the apples and oranges, as it were. And then still on the data and comparisons. And I think one of the panelists made this very important point. And I prefer to put it differently, that this is one country with many economies. One country, many economies. The averages are very good because we got to say something about a number, isn't it? But more often, these averages don't tell the story. Probably Lagos State, if it were a country, probably be number 6 to 8, in terms of the size of GDP of Africa. And on a per capita basis, probably over $5,000 per capita. I can bet you, when they start decomposing the GDPs of the entire states, you probably have states with GDP per capita probably a few $100s, as the case may be. So the special inequality, especially when you are discussing national development, just bear in mind that you have one country, many economies, and the differences actually can be as wide as the difference between day and night. But that brings me to my last point, by way of this observation. I saw the number put out there about the size of the assets, the banking sector assets. 42 trillion or something like that. Is that? Oh, I haven't looked at those numbers very recently, so I just had a quick check. And what struck me is actually that that's about 30% of GDP. And I screamed, wow. Well, when we started, just to put it in context, when we started it was just 1-point-something trillion. So before the banking consolidation. So if you look at it from where we started and where we are, it's a sea change, massive transformation. But there is an important point to note. And that is the total banking assets, with all they would say about their size and so on, it's just too minuscule. Huh? And that is probably, I'm just making a suggestion to you, maybe in subsequent ones, it would actually be nice to, of course you recommend we're going to read the report, but let's actually also look at where we are, the debt of the banking system relative to, or even in comparison to African countries. Because I quickly just Googled and checked, even by the ranking of countries by asset size as a percentage of GDP. And I was struck at how low we are on that scale, even by African standards. The countries as Cape Verde, Mauritius, Kenya, Senegal, even Ghana, and several others are way much higher. Now, this might have some implication about still the banking sector, financial system, and the kind of economy that we want it to be able to power. We had a dream of Nigeria becoming the Africa's banking and financial center. Now that we're actually integrating Africa to have an African continental free trade area, as it were, what kind of banking and financial system do we really need to be able to move the economy? It's the largest economy in Africa, no question. But the question is, what should be the next level for the banking system? And what should be the kind of disruptive change or changes that need to occur to be able to move the sector to that level that is able to power the Nigerian economy and increasingly African economy, because even our banks, their subsidiaries are all over the place. I understand even one of the banks in Nigeria, their total, look at their bottom line, probably accounted for more than 40% from their subsidiaries in and around Africa, as it were. So in this new world that is evolving, what kind of banking sector do we really would like to see in the next 5-10 years? And therefore, I'm just throwing this into your basket, Afrinvest. Probably in the subsequent ones, we could begin to say it's not just how we are doing today, but in relation to where we need to be. And I think that might be one way of pushing us in the direction of the further reforms and further changes, especially disruptive changes. I like the concept of disruptive change. You can repeat the same thing over and over and expect a different outcome. If you want to get to the heavens, if you want to get to UK this night, you can't go there by joining a Molue. You have to take a flight. And therefore, mine is not to get onto much of the discussions or even the content of the report, but just a quick footnote to urge that this particular eminent publication, which I think, in my view, I don't know anyone else like it, or as authoritative as it is, it's become a flagship publication for the banking sector. And I look forward to being able to get a full copy and read it, page 1 to the last. And I want to strongly recommend it to everyone. Get a copy yourself and also read it to the end. It says it's pulling back from the precipice, pulling back from the brink. Nigeria is always pulling back from always. Every time, I think one of the heads of states once said he was surprised about the country, about the economy. Every time you will think that it's going to collapse next month. And for some reason or the other, we managed to pull back from the brink. And I want to strongly recommend this for even those, the policy makers in government. It's, from what I've heard today, what is in the report, it's worth serious consideration. Even if you don't agree, but at least be aware of the rigorous analysis and prognosis that's contained therein. And I'm pretty sure if we pay serious attention to it, probably one thing or the other will probably change. And please don't relent, Afrinvest, just keep it up. 2005 to date, 14 years, you've been on it. We're looking forward to the 25th anniversary, to the 50th anniversary. And by the 25th anniversary, you should then roll back, maybe on an annual basis, to be able to say, we marked out point A to point X last year. And to be able, as someone said, we come here, we do this every year. You should be able to tell them in subsequent years' presentation, what is it that changed as a result of last year's own report. Thank you very much, and God bless you.